How you doing, everybody? Bob Iaccino from PureXposure Growth Series. Looking forward to seeing you on October 18th. I just got done watching the whole press conference with President Trump, Treasury Secretary Mnuchin, Robert Lighthizer, and Chinese Vice Premier Li He. It was much more positive than I've seen before. The fact that they did it live like that is different. It wasn't a formal ceremony. It was actually a conversation with reporters with some announcements. That agricultural package is massive if it becomes a real thing. The financial freedom that's going to go back and forth between the two countries for financial services, very big, especially in terms of IPOs for Chinese companies over here and potentially U.S. companies, some of the banks we might look at on October 18th, getting some investment banking deals over in China down the road. So let's put that aside for a second. What is good and bad about what just happened? Well, what was good, and again, this is a hot take here. The press conference just got finished. It's a different tone, and this was a very, very large deal for what was being perceived as a mini deal. Now, we did see equities come down a little bit, okay, but there was a lot more covered in this deal than we thought. We got the currency part, we've got some of the technology transfer and the IT protections. We've got the agricultural part, again, was huge. So this is a bigger deal than was expected. Now, the stock markets did sell off, but I don't want you to pay too much attention to that yet because it is a Friday and there is always weekend risk. You never can be sure that what happened at the end of Friday is what's going to carry on into Monday morning. So the first thing is we're going to watch the futures markets very closely when they open on Sunday and see if there's follow through or if there's continued sell-off. But risk assets were all going higher for the last 2 days. Ever since we knew these talks were going to go on again, risk assets just kept going higher. And I don't just mean stocks. I mean copper, iron ore, crude oil. Gold was coming off. The dollar was coming off. Now, the probability of a Fed rate cut slipped a little bit while the press conference was going on and just prior as the announcements and the headlines were hitting, but it's still above 70%. We still have that inversion of the yield curve. That disappeared this morning. It wasn't because of the announcement. It was already gone and actually came in a little bit more. So what I mean by that is on about September 3rd, the 3-month yield to the 10-year yield was -20. That's a -20 basis point inversion. This morning, +4. So the inversion was gone prior to this announcement. That held. So now we're looking at strong consumer confidence, Michigan sentiment numbers, lower inflation expectations for the consumer. 1 year and 5, 10-year inflation expectations are falling. So that gives a little bit of room for the Fed. But yet we still have a slowing global economy that even if this deal is real, it takes 4 or 5 weeks to get papered, then it takes 2 to 3 quarters to actually flow through in trade. We still could see some countries going into recession. But what this might mean, if the positive optimism continues, is that we're back to focus on earnings, which is what we should be focused anyway. Now, slower earnings that we may get this quarter, which basically begins next week, may not be as bad because guidance might start to be ramped up. So we're going to be paying close attention to that. The equity index futures on Sunday night, crude oil, copper, and then looking in towards earnings. Do we get an extension of this, or is this just another bunch of words, bunch of press conference, photo op opportunities that don't turn into a paper deal? It seems to me like this one was different. We'll see.